Where's I getting out with that? Hey everyone, and thanks again for joining me. My name's Matt. Today's episode is going to be a little bit different than what we've previously gone over. If you've seen the past few videos that I've done, you know mostly what I talk about is my career progression from leaving finance and going into real estate. But the reason why I wanted to make a video that's a little bit different is because there's been a lot of news around Charles Schwab and their free trading. I wanted to kind of create some clarity for that, let you know kind of exactly what that means if you had any questions, how does this affect other investors or other investment companies, and ultimately just make sure you have a good understanding about this and how it could affect you. Now, if you've seen the news, or it seems like anybody in finance's YouTube channel recently, they've all been talking about Charles Schwab getting rid of their commissions. Simply what that means is every time you purchase a stock with them, previously I believe you had to charge or pay like $5 to purchase that stock, and now it's completely free for you to buy and sell. So that saves you a lot of money, and as an investor, usually you're going to be looking for ways to save money, and obviously one of the biggest ways to hurt your investments or cause that negative performance is by paying a lot of money in commissions. So to give that to you as an example, I know that there are firms out there currently that charge as much as $20 to trade their stocks. Not their stocks, but any listed stocks on the New York Exchange or anything like that. So essentially what that means is for you to buy the stock, it's going to cost you $20. So let's say you wanted to buy one share of something that's at $50 a share. It's going to cost you $70 to make that trade and own that share. Now that means that you have $20 of performance that you would need to make up. So ultimately, to get your money back, that stock has to increase up to $70 a share. But what happens when you go to sell it? Well, unfortunately, that does mean you're going to be charged that $20 again, which now means that the stock would have to be over $90 for you to actually see a profit from that stock. Without having to pay a commission though, then you don't have to worry about the stock's increase, or, obviously that's what you're going to be shooting for, but you don't have an amount that you have to, recover or get yourself into the green. So it helps out on reducing the costs. Now, many times, they're almost, 10 times out of 10, it seems like this is definitely going to be an advantage towards the investor. But what I want to mention here is how that could affect you. Now, if you have Robinhood, or if you've heard of Robinhood, or even if you haven't, then really what Robinhood is it's a way for investors to trade stocks, or it's really kind of the first way for people to be able to trade stocks without paying a commission. And they were the first ones to do this. They were very kind of unique to the industry, and obviously since that's happened, other companies have been trying to figure out ways that they can jump on board with that free commission trading and get some of that business back that Robinhood took away from them. Where's I getting out with that?
A few moments later.
Oh yeah, so a lot of people do have Robinhood accounts and they use it for trading. A lot of times if you go on YouTube and type in like Robinhood, you'll see that one comes up is day trading. Maybe not in their terms day trading, but it's going to be high frequent trading, generally having positions maybe overnight, maybe a week. It's not day trading if you hold on to it for a week, but that's a pretty quick time to hold on to a position. And they're able to do so because they don't have to pay the commissions. So they can place a bunch of trades and not, lose everything just from the commission prices. What that ultimately though could encourage for you as the investor is overtrading or emotionally trading. When I talk to people about their investments and they have questions for me, generally one of the first things I like to go over with them is having a disciplined investing approach. So understanding your goal that you're working for, your time horizons that you'll be needing this money invested and when you'll need to access it, as well as your risk tolerance. So, how much are you going to react when the market goes up? How much are you going to react when the market goes down? Are you going to sell everything? Are you going to buy more when it goes down? That stuff's pretty important to figure out before you start putting money in place. But without having to pay the commission for those trades, you could potentially find yourself not making as calculated investment decisions and instead making more impulse or emotional reactions to the market, which is something we always want to stay away from. And that's kind of, I guess, maybe that's, I would say, the warning that comes about with this, or the hesitation, not really hesitation, but the thing that should be more clear than what the news is presenting is don't let this free trading influence your investment style. Even though it's free, doesn't mean you have to do it. It's like the handouts of food. Yeah, it's free and everybody loves free food. Is it going to be worth food poisoning though? Probably not. And it's the same thing with investing. Yeah, you have the ability to trade because you see it's going down, but is it the best time to sell, or is it better to hold on to it for a little bit? These are things that you should be thinking about before making these trades, and again, not letting the commission or lack thereof influence that decision for you. I think probably the most interesting part about all of this though is how this is going to impact the overall finance industry. Now, a lot of people immediately responded when they heard about this news saying, well, how does this influence Charles Schwab as a business? Well, it's only 4% of their revenue, or the commissions that they were making was only about 4% of the money that they were making. So it's not a huge part of their business. Yes, that does have an impact on their overall revenue, but that's why you might have seen, if you pay attention to their stock prices, why they've taken a little bit of a drop recently, because of how that does influence the revenue for the year. With that said though, they can still make money from their advisory services. They have a banking feature that will be able to support them with revenue. And I'm sure with all this new business, they anticipate that they'll be able to cover that 4% relatively quickly. Now, the interesting side of this though is almost immediately after Charles Schwab had this announcement, ETrade and TD Ameritrade both came out saying that they're also going to start with commission-free trading. Now, the commission-free trading for them is a little bit more detrimental because the commissions make up a much larger percentage of their revenues. I don't know the exact numbers, so I don't want to throw anything out there, but I'm sure you can easily find how much they were making from their revenues because this is a pretty big topic these days. So it'll be interesting to see how these other companies are going to be able to get rid of the trading or just do so quickly. And what are they going to use in lieu of that money coming in? So are they going to have to raise prices on something else? Are they going to have, account maintenance fees? Are they going to require minimum investments for these accounts? So these are all things to take into consideration, or at least things just to be observing as we see these changes taking place. I'm sure that they're not the only ones that'll drop to zero. It's interesting to see that two of the privately held companies haven't dropped their commissions trading to zero, Vanguard and Fidelity. But it'll be interesting to kind of just see how their plays will be after this, or what they're going to do to follow up with that. I know Fidelity and Vanguard, though, offer free trading on their ETFs, just not with, or mutual funds, but just not with listed securities, so stocks, bonds, you name it. So the finance nerd of myself is excited to kind of see how this is all going to play out, or what the future moves are, but my biggest advice is don't let this influence your investing, or don't let this create an impulse reaction for you and transfer from the institution you're at to one of these with the free trading just so you have that ability, or don't frequently trade just because you can do it. Ultimately, it's going to be, I think, something I just thought about is these free trading, or the free trades, are going to get people to spend more time on their website and get people to become more educated with the company and the products or services that they have. So, again, don't sell yourself on a service that you might not need, or a product that you might not need, just because now you know that it's available to you. You might not need an annuity, but just because it's available to you, again, doesn't mean you should get it. I think also, too, we'll have to see what happens with Robinhood. I'll be honest, I'm not entirely sure how Robinhood makes money. They do have a great platform though, and they make it very simple for a new investor to understand, if you're trading options, what exactly a put is, what do you mean by buying a put or selling a put, or going, long call. So Robinhood has a very good educational platform for the new investor, and it's pretty easy to use. It's a little bit more complicated to place a trade on ETrade, let's just say. But ETrade is also more advanced with some of the tools that they have and the charts that they can display for you. So ultimately, if you are a new investor and you are looking to get started, putting money away here and there, do your research. Don't go to a company just because they're the ones that are really public right now, or they're the ones that are getting all the media attention. Find what's going to work the best for you. If you are really only interested in purchasing an ETF, honestly, with all these free commissions, and even with the Vanguard offering free trading on theirs, and same with Fidelity, you can really choose wherever you want to go to. I would say maybe just take into consideration if there's an account maintenance fee, or an annual charge for having an account with them, or how much that would be for you. Another thing to take into consideration is, are you going to be a hands-off investor? Are you going to be the ones placing these trades, or are you going to want to work with an advisor and have them handle that for you? If you'd like, I can make a whole nother video going over how you can make these decisions, or help finding what's going to be the best institution for you. But I really just wanted to talk about the free trading today, and really kind of stress that importance of, don't let this influence a plan that you might have already had in place just because you have the ability to do it. Investing is definitely something that I always approach with a long-term approach, so my viewpoint is going to be a little bit different than what you might hear of somebody with a shorter-term investing style. But I think it's always important to understand both sides of it and just figure out what's going to be the best option for you. Not only what's going to give you the best for your goal, but what's going to give you the best sleep at night. If frequent trading makes you feel more comfortable because you can get in and out of a position, don't have to worry about it, fine. Then you could stick with the frequent trading. But if you would rather not look at your account every day and would rather just buy and hold on to a position for, even 5, 10, 20 years, that might be more your style, and so that trading aspect or the commission might not have as big of an influence on your decision. I know I kind of rambled a lot in this video, so I apologize about that. I really hope that this just kind of makes sense. If there's anything else though in finance related that you have any questions on, or something that I might be able to go over for you, certainly feel free to let me know. That's one thing that I love doing, is just being able to provide some clarity when it comes to investing in the finance world. I don't want to give you any specific advice, so I'm never going to tell you exactly what's the best stock or anything to buy, but I'd be more than happy to address any questions that you might have about either investing or accounts or retirement, or anything that I might be able to help out with. Certainly feel free to ask me, and I'll be able to provide you the best answer I can. Thanks again for watching, and later on this week I should have an update with my real estate classes. Again, just wanted to more or less talk about the free trading, investing, make sure that nobody's making some impulse reactions. Thanks.